I know SD Bullion has the lowest prices, but have you seen their price on 2015 Silver Eagles? SD Bullion has been selling them for $2.25 over spot, any quantity for months now. That's only 25 cents above mint cost. Why pay up to $3.69 over spot at AppMex, plus another 4% to use your credit card? SD Bullion's low credit card rate of only 3% means more silver for your stack. If you're still buying your Silver Eagles from the big boys who have offices on Wall Street, you're still paying up to 700% over mint cost more on Silver Eagle premiums you should be. Find out why nearly 15,000 new customers have made the switch to SDB. SD Bullion, the lowest price, period.
This is the Doc and Eric Dubin with the SD Weekly Metals and Markets Wrap. Joining us today is our good friend and fund manager, Dave Kranzler. It's great to have you back, Dave.
Great to be here. Thanks for having me.
Well, on this Friday in June, where it certainly looks like by the end of the weekend we could have some interesting developments in Greece and perhaps a whole new situation there. But before we discuss Greece, let's talk about the markets. This week, gold and silver have been hit once again, and again here on Friday, silver knocked back under 16. It's holding up just above 1580. We're recording this a bit early here in the day, before the noon hour Eastern on Friday, so we haven't seen the rest of the afternoon's trading. We'll see whether silver can fight its way back.
Actually, just to interject here, because I'm watching the silver futures real time, they're now back over 1590. And we're headed towards 16. I wouldn't be surprised to see silver close back over 16 again, like it did yesterday. Actually, it popped over 16 right after the COMEX closed. And gold is actually recovered all of its overnight hit. It's at 1182, and it's up about 50 cents from where it closed yesterday afternoon post-COMEX computer session.
Yeah, if you look at the gold trading, it really looks like a beach ball pushed underwater in that 1180 level, pushed under and then popped right back up. So again, it also looks like it's going to try to close above 1180. So let's get your take here, Dave, just on the trading action this week and then where we're setting up for the second half of June.
It looks to me like whenever the paper markets are open in gold and silver, they try to sell them down. The markets tend to drift higher when the true physical bullion markets are open, India and Asia, which usually runs from about 8 p.m. East Coast time until 2 to 3 in the morning East Coast time. That's kind of the primary time period when the physical markets open. I mean, it's India's in what's supposed to be a seasonal lull period for their gold demand, but obviously they're importing a crazy amount of silver right now. I think part of it's being used to fuel their solar program, which China's in the middle of also. The anti-gold rhetoric coming from the financial media is probably the highest I've ever seen it. I mean, Bloomberg yesterday alone had 3 articles that were negative and also contained a lot of erroneous information about gold. The financial media and bullion banks like UBS are constantly publishing articles about lowered demand in China, which is absolutely untrue. In fact, gold deliveries onto the Shanghai Gold Exchange are in excess of 170 tons so far this week, and that's just an enormous amount of gold. So, we're seeing the extreme disinformation being disseminated by the financial media, and we're also seeing what I call an extreme amount of attempted downside manipulation by the bullion banks. And as evidence of that, and I posted a piece on this on my blog last night, as evidence of that, the open interest in COMEX silver futures is at an all-time high, and it went up again yesterday. It's over 191,000 contracts. You're talking about that translates into 958 million ounces of silver. Well, the world only produces 800 million ounces of silver annually. So anyone who looks at those numbers and says the COMEX, it doesn't manipulate gold and silver, has undergone a full frontal lobotomy. I mean, it's just absurd. And then when you dig into it and you say, okay, you know, the COMEX itself only has 180 million total ounces of silver that they're reporting to be in their vaults, and I don't believe all that silver's there. Well, that's what they're reporting, and that would be silver that's available for delivery plus silver that's safe kept there, quote unquote safe kept by by investors and commercial users of that silver. And in fact, in the account that is designated as being silver that's being held, that's available for delivery, they only have 58 million ounces of silver being reported, which would be available for delivery. So when you have 950 million ounces of paper open interest against 57 million ounces of underlying physical silver, this is unprecedented in commodity market history. We've never seen an imbalance between the amount of open interest in futures and the amount of underlying physical commodity available for delivery ever in the history of the universe. I mean, we're talking about numbers here that are more out of balance than the amount of outstanding derivatives in the world versus global GDP. I mean, it's just incredible.
And for the benefit of our newer listeners who haven't followed along when we've described what this open interest mechanics mean, the process by which the J.P. Morgans of the world and so forth are trying to push down metals, basically targeting silver first and foremost, is that they're issuing new naked shorts, and on the flip side of that trade, there is an ever-increasing number of people that are willing to go along and just hunker down and hold positions in paper. Granted, it's paper, but nonetheless, there's still this paper war going on the COMEX. And the bottom line is that the J.P. Morgans of the world are not actually getting much traction here. They just haven't been able to get below 16 for any material period of time, less than 24 hours, as I pointed out in an article I published on Wednesday. And, the way in which frequently the bullion banks try to target precious metals and push them down is that they attack the more thinly traded silver market first and foremost in the hopes of shooting silver down and then dragging gold down too. And one of the most interesting things that happened in this week was that when they tried to do that in the early AM hours Eastern time on Wednesday, they profoundly failed. They knocked down silver. It went down about maybe 12 cents or so, but at the exact same time, gold actually went up. I mean, it's a completely counterintuitive effort on their part. And it just speaks to how the tight markets are not willing to go down, because we've got this problem in physical with India taking down more silver, and their gold is actually pretty robust because what happened in the last 2 years when they did all these excess tariffs and goofy things about re-exportation from jewelry manufacturers and whatnot. I mean, all that did was just push demand further out in time, and now we're beginning to see that, much to the chagrin of the powers that be, both in India and around the world, in the bullion community, for the powers that be, because now they're trying to shake the tree when it comes to temples and individuals holding gold in India in an effort to try to liberate some more supply. But when it comes to what's going on with how they're doing this price suppression effort when it comes to silver, the key thing to understand is that they're issuing all of these new naked shorts on the COMEX, and LVMA as well too, but we can see it even more so in the COMEX in this week, in an attempt to keep the prices down. But the people who are interested in going along silver are showing up and spoiling the plans of JPM.
Let's shift gears a little bit, guys, and discuss the situation in Greece. Are we going to see the potential for a crisis this weekend?
Oh, that's a good question. I mean, as Eric well knows, I've been calling all along for an eventual bailout to be reached. And my reasoning is if you follow the money, everyone knows what the prima facie exposure is to Greek sovereign debt, which is about $320 billion. But the banks have, much greater exposure in the form of off-balance sheet credit default swaps, right, and other types of derivatives. And so my theory all along was that the banks weren't going to shoot themselves in the foot by letting Greece Greece default and leave the EU. But it certainly looks like they're playing probably one of the most extreme games of chicken I've ever seen. And I mean, I may end up with egg on my face on my call, which is fine. I don't care.
Yeah, I'd agree with you, Dave, that I don't think they're going to let those derivatives fail. Do you think that we're going to look at another bailout, or do you think they might bail in the Greek depositors to come up with the cash like they did with the Cypriots a couple of years ago?
Well, yeah, no, I think there's a bail-in will be implemented, but the question is how much cash is left. I mean, a lot of cash has been drained from those banks. I mean, I don't know if there's enough cash to even for a bail-in to even dent what the liabilities are. I mean, who knows? It's a very, very good question. I know James Turk was hypothesizing that a bail-in was going to happen, and I mean, it makes sense that it will, but again, at this point, I think there's so many balls in the air. I think you just apply the principles of random probabilities, and anything could happen. And I would suggest that the news that the IMF and the ECB consortium was calling Greece on its bluff, which happened overnight, which should be bullish for the metals. But if you look at an overnight graph of gold and silver, gold took a hit right around 4 a.m. East Coast time. And that right there is more evidence of the manipulation. I mean, whenever precious metals friendly news hits the tape, they try and smash the metals. So I think it tells us that the banking/financial community is worried about the Greek situation, which is part of the reason why I think they've been putting pressure on the metals all week long.
It's pretty
Eric,
clear.
what do you think? Because I know you're taking the opposite view of me. You think Greece is going to blow up?
Yeah, I mean, when we speak about a game of chicken, this is the kind of thing where, whether you're talking cars or chickens running towards each other, both of them are going to be whacked. I mean, there's no doubt about that in my mind, and I think we all can agree that the carnage is going to be just spread all over the friggin' place, because this is just an untenable situation. Both negotiating parties have reason to be completely freaked out when it comes to giving up too much of their negotiating position. On the ECB side and Germany, they're scared to death about Spain, and to second degree, even Italy, beginning, and Portugal as a footnote, beginning to have social unrest to the point where we actually get more Greek-style political parties running the country. And, even back 4 months ago or something, I was beginning to warn about what was going on in Spain and their election coming in December as being the ultimate black swan. And a lot of people still are not even looking at that issue. I mean, Zero Hedge obliquely discusses this, but the realities are such that it's actually a very material probability that Spain is going to go hardcore socialist in December when they have their next election, and that we will no longer be talking just about Grexit, but Spain exiting. God knows what kind of acronym they're going to come up with that one. But the reality is,
maybe we should coin the term. Is it a Brexit?
Before Zero Hedge steals it, for Christ's sake. The bottom line is that I think that we're actually going to see some kind of a hybrid between these two polar camps as far as what's going to happen with Greece. They do have the ability to carry this crazy game of chicken on for probably about a month or two more. We are at the point now where the deposits on hand in Greek banks are roughly equivalent to where the ECB loan obligation stands, so that whole James Turk thesis is looming in the background, and I think that the ECB in particular is going to start getting some itchy trigger fingers when it comes to whether or not they want to, just push the envelope, start the crisis, and then go for a bail-in so that they can cover a small percentage of whatever, like 30 or whatever % of their loans, because simultaneous to whenever that trigger is pulled, you're going to have bank runs. Then you're also going to have capital controls come in almost instantaneously after that as well. All of this points to July actually being the month where I think we're going to finally see the fat lady come out from backstage and start singing on the stage, and we're going to begin to know what's going to happen in Greece in the final analysis, because even though we've gone through this cycle over and over again all year and extending back into the fourth quarter, where every week the negotiating positions between these two camps would flip back and forth, and the song and dance would continue, and then it's starting to escalate now. I mean, going into last Friday, pretty much everyone in the alternative investment camp was going nuts, thinking that, the Friday deadline was going to be the deadline, and it was obvious that that wasn't going to be the deadline, if not for only any other reason other than the fact that the bundling phenomenon that I've described could step in and give Greece a few extra weeks to make their IMF payment. And it will not take that much for Dave's thesis about following the money and seeing the ECB and the Germans, etc., backing down in the very short term just to buy a little bit more time. So in the short term, I actually agree with Dave, and that's what I mean by a hybrid. I think that this is actually going to be a little bit of both going on, but the reality is that July, in my opinion, and it looks like that's going to be where the period is going to, the window of time where we actually get the final resolution as to what dynamics are going to spin out of control. It may not be that Greece, even though they are currently in a state of technical default, it may not be that they actually fully default and Grexit in July. I think that actually is going to happen a little bit further out in time, but the process by which those mechanics start moving, the gears roll down, will probably start in July, and Grexit, frankly, I think is going to happen no later than first quarter of 2016. And, while I'm at it, I might as well just throw in as a footnote, too, there's a huge percentage of the people in the alternative asset community that are now targeting September, October as being the be-all and end-all for the shitting the fan scenario, including analysis with respect to Jade Helm and folding in all of that kind of stuff. And I follow news in the alternative asset community pretty closely because, as wearing the hat of managing editor over at the News Doctors, I just deal with thousands of stories all the time, and I have a pretty decent sense of where sentiment is. And it's always interesting to think about how, in the alternative space, which represents maybe 10% of the overall conventional thinking financial world of money managers and traders, etc., in the conventional world, we're beginning to see people beginning to fear a real huge accident in the credit markets, and that the thesis of, the Fed has our back and we can just be idiots and trade the bond market to oblivion, and maybe a season on some fundamental rational analysis on top of that when people are talking about the potential of a derivatives crash creating a deflationary spiral for half a year or whatever, to the point where bonds will in fact perform well. But that aside, the reality is that people are beginning to get religion in the bond market and start acting like normal actors instead of just drunken sailors taking on the bond market simply because the Fed and other central banks have had their back. So anyway, the bottom line is, I think that there is now too many people thinking that the black swan is going to happen in September and October, and by definition, black swans don't happen when everyone thinks that it's going to happen. And the scenario for actually seeing 2016 as being the wipeout period is actually pretty material in my opinion. So anyway, bottom line, I think Greece is going to hit the fan in July, not this month, even though it looks really horrible right now. And the same kind of dynamic was going on, end of May, when everyone began to start looking at last Friday as being the be-all, end-all date. And it's going to just repeat itself.
I'd like to get both of you guys' takes on the metals over the more intermediate term here, with both silver and gold really not too far off of their correction lows here. Silver trading around 16 an ounce, and gold trading, let's call it 1180. We're really not too far from the lows. Do either of you think we'll see the lows retested again? I know, Eric, you've been calling for a pretty strong second half to June. So I'll get your take here first, Dave.
Well, that's a good question. And part of the problem with forecasting markets is the degree of intervention is so extreme now, intervention by the central banks, that these markets have counterintuitive and irrational moves. For instance, with the Dow Jones transports selling off pretty aggressively for the last several months and interest rates going higher. Well, the transports selling off are telling us the economy is getting worse, which means interest rates should be falling, not rising, and yet interest rates are rising. And to me, that's a hallmark indication of the collateral damage and the in what happens from extreme intervention. Markets behave unpredictably. And so, having said that, I still stand by my call that silver will be the best performing asset class for 2015, still up on the year. And actually, I may be wrong about that because the junior mining stocks may actually outperform silver, and I didn't even think about that because if gold and silver move higher this year, the junior mining stocks will move higher by 2x or 3x, and we're already seeing that. Most people aren't even aware of this, but since March 10th, the GDXJ, the junior mining stock ETF, is up almost 18%. It was up a little bit over 18% when I ran the numbers 2 days ago, and obviously they've hit the sector a bit the last 2 days, but it's outperformed any other investment sector by far. So, and I think that's sending us a message. I think that's telling us that smart money is expecting higher gold and silver prices this year, because if you think you're going to have higher gold and silver prices and you want to really take advantage of it in a leveraged way, you buy the junior miners, right? So, again, I do think that between now and the end of the year, gold and silver are going to be a lot higher. But what sort of zigzaggy path it takes between now and the end of the year, I have no idea. I do think we're starting to see more extreme volatility in the metals right now. And again, I also think that's partly because they're losing control of their ability to keep a lid on them. But I think, we could see some extreme moves in either direction. And having said that, I wouldn't be surprised if we wake up one day sometime in the next 2 or 3 months and you see gold up 50 or $100 overnight and you see silver up $1 to $2 overnight. I'm not saying I'm expecting that to happen, but it wouldn't surprise me.
Back on May 30th, when we were doing our show 2 weeks ago, I talked about how silver would not ever go below 16, and that gold would not ever go below 1100. The probabilities of that are just, at that point in time, in my assessment, were really, really strong. I proved to be wrong on silver. However, the cartel has not been able to get silver under 16 for more than a couple hours.
Right, and so that means that doesn't invalidate your call, Eric.
Yeah,
natural laws of probability means that let's see it close below 16 for a few days. Then maybe we can say your call was invalid.
Right. I'm just being humble in the face of the markets, and the markets are always the ultimate humbler. That's not a word, but they can always humble.
What's a good call so far.
Yeah. The bottom line is that, there's just way too much demand out here, and the establishment is trying to pretend that there isn't that demand with the stories about China. And, even a year ago, we could tell that when they were talking about removing the import window from Hong Kong's exclusivity when it came to the imports of gold through China, that the mainstream media and the gold bullion banks and cartel, et cetera, would be pushing the meme that, China's gold imports are going down. It's just, it is so easily discernible to see through these lies that you really got to wonder what the heck's going on when it comes to a lot of people in the conventional finance world. It's just they're so damn lazy. They don't go out of their own little bubble to find out the real news. But all of that being said, I think that we're still in this period. This whole week, they've been trying to beat the snot out of silver by issuing an enormous amount of naked shorts, and that's being reflected in the ballooning open interest in silver on the COMEX, and they're utterly failing. That's the most important story for this whole week. They've been trying for the last 3 days to beat the snot out of silver in order to try to put a cap on gold, and they're failing. People always ask us, when are we going to get to the point where the cartel is going to lose control? When are we ever going to be able to see higher prices because of this all-powerful government interest guarding their back? Well, manipulations can't go on forever. And the degree to which they're manipulating pretty much all markets of any significance worldwide is beyond anything that has ever happened in human history. And the complexity of our system is such that an accident is going to happen. It's just the mind of a man or multiple women, or in the case of Yellen and other folks sitting around the table trying to figure out how to actually keep all of these balls up in the air as they do this monstrous juggling act that has never been done before in financial market history, are such that we are going to get an accident. I was saying before earlier about how the 2016, in my opinion, is actually going to be the big one as opposed to the October or September, October period. I need to preface that because I do believe that we're going to see a very, very painful stock market crash, or at least a significant correction on the order of about 20-25% later this year in the summer. And going into the fall, just like that thesis is being outlined by a lot of people. And everyone's going to celebrate that, oh, yeah, I was right with that call, blah, blah, blah. But what it's going to do is going to put the whole nonsense about we're going to normalize interest rates talk and jawboning from the Fed on the back burner, and they're going to flip and start talking about quantitative easing. What is it now? Number 4? I mean, if you count Operation Twist and all that, maybe we're talking about 5. I lose track at this point, frankly. And whether or not they get that done in time or not is another question entirely. But the whole sentiment is going to shift like, oh, please, Mother Fed, please save us because of the equity market correction. And then that's going to make things even worse as a setup in 2016. I believe, and I stick by what I said on May 30th in our show, that we are already well off the lows of the bottom. If you look at a 5-year chart, and silver and gold, you can see that with the October-November period being the lows for that secular bear trend, and now we've flipped into a secular bear mode, bull mode, in a long-term cyclical bull market for precious metals. I mean, this thesis, even from the most basic price action point of view, is valid. And if I'm right about this period that we are moving through right now, with silver not being able to be pushed materially below 16, and certainly gold holding 1100 with great ease, the whole summer doldrums thesis that comes online around this time, and that also reflects what Bloomberg has been reporting, Dave. I mean, it fits into that whole meme that they do every darn year. It's going to not happen. We're going to see a summer that's going to be very strong, and it's only going to take a matter of days before the precious metals take off. And we're going to see it next week, I suspect. We're going to also have the typical aggressive manipulation efforts around key dates like the end of the comics trading this month. We had it with the Friday employment report last Friday, and I also warned about that in May when we did that show on May 1st.
Revision. Just about every economic data that gets released at 8:30 a.m. It immediately is met with a hit.
The Fed meeting next week.
Fed meeting and
FOMC, that's always, yep.
Yeah, the Fed meeting and the employment reports are the Godzillas that they go after.
I think Zero Hedge did a study. On average, gold drops $30 every week. There's a Fed meeting. I mean, that is it's so statistically improbable for something like that to happen unless the market is manipulated. And I have no idea, how guys like Dan Orcini can claim that the market's not manipulated. I mean, it's just absurd to make that claim.
He's been so rude when it comes to his attacks on GATA in the last 3 years and gold bug, quote unquote, people in general, that I'm not going to bite my tongue. He's a jerk when it comes to what he's done, and it basically has been motivated since the 2011 switch when, from a technical point of view, and he is primarily a technical analysis guy, it's hard to keep your clients when the price action's going down, 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 down. And so
he's burned the bridges of everyone who sort of helped propel his business. So I got to imagine he's got subscribers dropping left and right. But anyway, just to circle back to what you said, Eric, I tend to agree with you. I think we're going to see a surprise move higher in the metals. I don't know if it starts as soon as next week, but I agree we could see that. And interestingly, and again, I'm not at liberty to disclose where the source of this information is coming from, but there is chatter in London that is suggesting that London may be running out of silver to send to the refiners in Switzerland by September, October time period. And again, the source of the rumor historically has usually been a pretty good source about 80 to 90% of the time. The guy's not always right, but he has, a very, very uncannily high scorecard when it comes to calling longer-term directional moves in the market. So We'll just wait and see what happens. Again, I'm not saying I necessarily agree with the rumor or the information, but I'm saying that based on the numbers that I look at and everything I study, I just don't know how they're not running out of silver.
Yeah, and to corroborate that we've known for even since December of last year that the amount of mine supply that will be coming in through on the 2005 supply basis is going to be insufficient to meet demand. And, even of all bullion bank participants in our cartel, HSBC put out a report about that in January. I mean,
I remember that report.
What was it? They said that we'd have a supply deficit of 8%, if memory serves. I mean,
something like that, yeah.
The markets always get the pricing in action, and markets are always set with pricing discovery being shaped by the price action at the margin. And an 8% move in the market like silver is just a gigantic supply-demand shift that has the capacity to make giant moves in the price. So, I'm aware of the same rumor you were speaking of, and I think that it's probably on target.
Well, and this is something I thought of yesterday, and this is something I think John's audience will love, and maybe they can bombard the trustee of SLV with emails on this. Why don't they make J.P. Morgan open up the doors to the SLV vaults in a public display and let us see the silver bars? Let us see the serial numbers and corroborate them with the list of serial numbers that SLV publishes every day. It's just because they publish that list of serial numbers, that doesn't mean that the bars are really there. And let's have a look at the files to see if that silver's been leased out or if it has hypothecated paper claims attached to it such that SLV doesn't have legal entitlement to those silver bars. Why can't we see that? What's so hard about that? Let's see if the silver's really there. I mean, everyone in the gold investing community has been questioning whether or not the gold bars are really in GLD or SLV. Well, disprove us. Tell us we're wrong. It would be so easy for them to do that.
We probably know the answer, that not all the silver is there because it's been hypothecated. But I laugh because they actually tried to do some things along those lines when it came to GLD back in, I believe, 2010 when they Pisani over at CNBC was
I was thinking about that. Right.
That backfired rather mightily.
Remember, they showed some bars with serial numbers, and it was ultimately discovered that, hey, wait a minute, those serial numbers match the bars that I'm supposed to have, and they're not, in the right vault. What the hell's going on?
Yeah, I remember that very well.
Pisani was shown a pallet. This was all on tape. It was live. Pisani was shown a pallet of gold bars that was supposed to be part of the GLD allocated section of the vault, and he went and picked up a gold bar, and they zoomed in on the serial number, and it turned out it was a serial number that didn't belong to GLD.
And for those who don't remember the story, how we covered it and we expanded on the story, our friend over in London, Ned Naylor Leland, was sitting in the office for a sales pitch for his fund. He was with Cheviot Asset Management, and there was another gold ETF. I'm drawing a blank at the moment, the name of the ETF that was sitting with him, trying to pitch to Cheviot to invest their funds with that ETF, and he was telling that story. They said, "Now wait a minute, that's one of our bars." So he relayed that to me. I then actually went and pulled up their vault inventory numbers, and sure enough, that serial number from that video was confirmed to be listed in their inventory, not the GLDs.
That's awesome.
So maybe we'll try to dig that up and include those links in the write-up this week. Next
time they'll use computer-generated graphic bars with random number assignments for serial numbers.
Right. All right. Any other last thoughts, guys, before we wrap this week's show up?
Well, I would just say, for people who still have money, cash to convert into gold and silver, keep stacking because, it's been painful for all of us, but I think we're getting to the end of this, and I think the upside that we're going to experience in gold and silver are going to more than make up for the pain we've experienced. Of course, I think that the catalysts that trigger the uncontrollable move up in gold and silver will probably be the same type of triggers that make life not so pleasant in the United States. But we'll see about that. That's a whole other discussion.
Right.
Yeah, I just toss out too, without getting into granularity on this show, but we'll do it next week. The whole geopolitical backdrop is once again escalating to the point where there's going to probably be a lot of warfare in this summer. And Ukraine, though, some in the conventional thinking space were thinking that we'd have a period of calming down and some kind of resolution, and with Kerry going over and talking to Lavrov and Putin a couple weeks back with the potato gift exchange, etc. that there would be some kind of a backpedaling of aggressiveness when it comes to at least the United States / NATO front. It's gotten to the point where even if that does happen, the Poroshenko regime and all of its various factions within it are probably going to just see in their most game theory logical position is to just damn the torpedoes and move forward and attack the eastern Ukraine. And when you have that kind of thing going on on the ground, as opposed to whatever the bigger powers of Russia and U.S. NATO are concerned, you have the recipe for just a plain old fog of war accident. And I think that's probably what's going to happen. They're going to be more aggressive when it comes to the East, and the East has consistently whooped the butts of Kiev and the regime there because they have moral authority in the people behind them, as opposed to this tin pot dictator that's over in Kiev and backed by Westerner interests. So stay tuned. I mean, the summer is really going to get ugly, unfortunately.
All right, Dave, always great to have you back.
Hey, thanks for having me anytime. Love talking to you guys.
All right, we'll make sure you have you back on soon again as well. Always appreciate your commentary. I know the readers do too. So
sounds great. I look forward to it.
All right, for the Doc and Eric Dubin and this week's guest, Dave Kranzler, thanks for tuning in to this week's SD Weekly Metals and Markets.